The big money here is waiting for the entire move here. That's where big money is located. It's not playing the small individual fluctuations on a week to week or month to month basis that are squiggling up and down here. So what I'm doing is I'm playing the big picture view. I'm playing this entire boom phase here in silver and letting that thing run. And I think we could see. I think some of these companies could go up. I mean, massively. What is massively over 10x, maybe even 100x.
You're watching CapitalCosm. My name is Danny. My guest today is Andy from the Finding Value Finance channel. And it is September 2nd, 2025. Andy, thank you so much for coming on the show, my friend.
Yeah, thanks for having me back on, Danny. Really appreciate it. Thank you.
Yeah, it's always fun, Andy. Let's go ahead and dive right in. I know you've got some charts ready in the wings here, but so for you, what is top of mind for you? What's on your radar screen today?
Yeah, well, I mean, the most popular right now is gold and silver and platinum, the precious metals, and they do look incredibly good. The mining companies look really good of precious metals. They look pretty supercharged, and we can dive in and look at those. I still like the whole commodity complex. I think it looks fantastic. I think there's opportunities that people aren't looking at as gold and silver come into the light here, and gold's our leader. I think there's stuff lagging behind that people aren't paying attention to, in particular like iron ore and other, we'll call it base metals, copper, and companies that are still down that haven't really moved all that much. That's kind of what I do. I call it ninja buying. Ninja buying is where you kind of just go in there, don't make any noise, no one knows you're buying it, and you just accumulate when it's really low. So gold and silver look fantastic. Yep, they're definitely getting more attention. But other commodities, I think, are of better value. Right? Well, I wouldn't say value. They're no one's looking at them. I'll just put it that way. No one's looking at them, and I think they're really good entries.
Yeah, so you've named iron ore and copper and a few
Yep.
others here. It looks like you've got a chart here of gold futures.
Cool.
So let's kick it off with the start of the show right now, and we can segue into some of these other commodities. So, what are we seeing with gold today?
Well, yeah, gold's breaking out. It looks fantastic. We got this purple resistance area. Usually, you go up, you hit some sort of resistance, you get rejected at it, which creates that resistance zone, and we have broken through that resistance zone. If gold's our leader and it continues to go and fly higher, I think everything else is going to follow. So I like starting off with gold because gold is, quote, our leader, and it continues to make new highs. So I think gold could have another leg higher here. I'm not as, how can I say this? I'm not as obsessed with price targets as maybe a lot of other people are. It's a decent size pattern. And yeah, usually the opening here can be, here, let's do this. This opening will be roughly what the projected price would be. You could throw it up here like this. And yeah, maybe like 4,000 or something like that, depending on how you draw the chart. So yeah, we could move up here and another leg higher. I think silver and platinum are going to all follow with it. And silver's looking absolutely fantastic for a longer term, bigger, we'll call it move here. I like looking at it like this, a little bit easier to see. Actually, let's go XAG. So what I see here is I see a similar fractal. So this fractal there is this one here, like that big cup and handle. So you get the cup and then the handle there. This is another cup and then the handle there. Very similar in its movement for silver. If we were to get the same percentage increase here, just for the heck of it, we can kind of grab this guy and throw it on top, and then you get some ridiculous. Okay, it's not going to do that percentage, but yeah, it looks fantastic, and I think we could go multi $100 over the whole course of the bull market in silver here. So gold's our leader. Silver's going to follow. I think platinum will follow with it too. And I think we'll see all of precious metals work its way on up. And this is a 45-year cup and handle pattern here. That is a big boy pattern that's breaking here any second.
So that, I mean, we've looked at this pattern countless times with numerous other guests as well. But the fact that it is such a long-term pattern that's been formed implies that the breakout would also be long-term and long duration, correct?
Yes, totally. The bigger patterns, sometimes they can have a very large spike in the beginning. So maybe we go, I mean, difficult to put numbers on it, but usually when you get these big, gigantic buildups of energy, you release to the upside in a large way. Could we go like $100 or $90 right off the bat? We could. Yeah, we could do that in a very quick, short time frame where maybe even this year it could do something like that. So yeah, I mean, that's kind of what I look at. Now we can get into some of the ratios if you like with some of the mining companies, because I think those are they have a lot of positive developments there. And I just wanted to start with gold and silver so you guys kind of understand how big these patterns are. They continue to break. They are moving to the upside. So everything looks pretty solid from the commodity standpoint. And what I would do is I'd go look at the mining companies because that's generally what follows next.
Yeah, let's go
So
ahead. Let's go ahead and do that.
let's do it. So like what I would do is do something like GDX divided by gold. And then we'll do this. Get off log there. So we got this big downtrend, and you can see that we're in this bottoming pattern here. We recently broke out of a downtrend to the upside. And that's kind of like the early stages of how these things kind of bottom and move is you'll get the commodity to start running, and that's running fantastic. Then the mining companies start to catch up. And we've broken the downtrend here. That was May, June of 2025. And now we're off to the races from an incredibly low point on the charts. So you've got a ton of runway ahead of you for potential outperformance of gold mining companies to really outperform the metal itself. So I'd be looking. Well, I've already looked. I've already positioned probably about a year ago in the bottoms of the equities, but this looks really good and it's a positive development.
But having the mining companies run up quite a bit in the course of the last year or so, don't they need a bit of a break to catch up to their moving average?
I don't worry about kind of the short-term movements. I look at the big long-term, big picture view, and some of these things can move dramatically in short periods of time. So I'm not in the camp that things have to correct. They don't have to do X or Y or Z just because of, let's say, a value of relative strength indicator being at some level. They can stay very strong for a period of time. Back in 2019, 2018, 2020, we saw companies do like a 5x in a very short period of time, some even a 10x. So I wouldn't get too worried about short-term market movements. If you're at a valuation against gold here this low, I'd be looking for entry points that are also trying to break out. Some companies are leaders, some are in the middle, and some are laggards. And the laggards and junior companies, they are still like just breaking out here in some of these. And one of the things that I like to do is you start to compare them together. So we can do GDXJ divided by gold, which is another ratio. And I've got my winning at life entries down here is where I would have entered. You go all the way down. Usually you get a large impulse move higher off of a bottom, and you get a wick. A wick is kind of a lot of selling pressure came in, and then buyers came up and just bought the living heck out of it. And a lot of the times, if you draw kind of a rough zone, this zone down here, so you get a zone, And that's a good spot to accumulate if you've already bounced off of it multiple times. So I would be accumulating or looking for accumulation in this general area here. That's the way that I view it. Other people say, oh, it could break to the downside. I'm like, not from this type of valuation and gold moving higher. So gold took off in 2022, which was back in this area here. If gold was doing this, this would be a great entry point for the miners because our leader, gold, was already running. And now we're starting to head higher in GDXJ and moving on up. Another thing I like to do, obviously that's very low and it's cheap. I like to do GDXJ versus GDX to see what's happening there. And you can see that we're real close to breaking this downtrend where the juniors could at some point in the future start to outperform some of the larger companies. And that's where I get excited because the juniors, I mean, they are juiced. A lot of them are juiced to the max. So that's what I like to see because you can see the leaders, the big boys taking off, the Newmonts and stuff like that. You can see gold taking off, and then you start to look at things that are lagging, like the junior companies, and then there's still good entry points in the juniors. Even better is silver. Silver's a little bit more leveraged than the gold miners because gold miners to gold, obviously gold goes up at some pace and silver generally goes up faster. And then the mining companies are just a multiplier for the most part to the commodity itself. So when I go and I look at, say, something like SIL divided by silver, you can see we bottom over here. That's where I would have been really interested in. You get the impulse move higher. Generally, you come back to this general area, and then that's a good spot to accumulate at. Just looking at that, and usually you get the small selling pressure leaking all the way back off. So this is your impulse move in 2016, the big shoot higher, the small selling pressure all the way back to the bottom. And this is your buy points, that whole bottom there. And now we're heading higher. It's looking fantastic, in my opinion, to move on up against silver. So what happens is gold kind of maintains its value better than silver and a lot of these other mining companies. So at bottoms of the market, these silver junior companies most likely will sell off, and gold junior companies all the way the most to the downside. They'll be off their highs like 99.9% from their bull market, so to speak. And then when we go into the bull market, everything unwinds. It all unwinds, and I think at the end of the bull market, the juniors will be the most expensive, and they will move the most to the upside. So what we're trying to gauge with all these ratios and looking at all this stuff is kind of the firing order. You can kind of see that through the ratios, like GDX outperforms the beginning, SIL, and then the juniors will come next. And then we want to see them outperform the commodity itself. So like this is starting to outperform SIL-J divided by silver.
Mm-hmm.
And then you can see that these falling wedges and then these gigantic kind of moves higher in very short periods of time. And then we've just started this breakout for SIL-J versus silver itself. This is a big deal because we could see a big move out of the silver junior companies. And if you've got good entry points, yeah, that's what I'd be taking right here. Taking those entries.
When you look at the precious metals over the course of history, and you look at what's happening today, and you say to yourself, you know, we've had a big run so far. I mean, do they need to take a breath? Do they need to take a break? I think when you look at how much money was allocated into the precious metals, into these different commodities, it kind of, I think people are looking at it the wrong way. What I think we should be asking ourselves is not whether or not we're in a boom, whether or not we're in a bull market in precious metals or in commodities, but I sense that the real question should be more something along the lines: are we normalizing? i.e., have we been in a commodities and precious metals depression this entire time over the last 50 some odd years? And are we just now going back to normal? Like, I don't hear anyone else asking that question.
Yeah, so the way that I view it is that these work under certain market conditions. The market conditions that are present in increasing interest rate environment and the breakage of the 40-year downtrend, that is what's, I think, driving money flows into precious metals. And then what's going to happen if this does occur? People are leaving the bond market. They are preferring precious metals, and that's why interest rates are going up, is because people are selling bonds and they don't want to buy bonds. So you've got a mismatch between supply and demand of bonds, which the resultant is higher interest rates. That puts pressure on the stock market at some point. I think when we hit 4.5%, 5% on the 10-year, that'll start putting a good headwind on the stock market. And then what happens is investors look at what the potential investments are in the entire world, and then they start to allocate capital based off a variety of different things. Like, a lot of regular people, I'm just going to make it simple, is they just chase price performance. That's really what they do. So if bonds are not working, they don't put money into bonds. They'll put it into the stock market, and they'll put it into precious metals and other things. Once the stock market stops working and puts losses in the accounts of people, then people will stop buying bonds and stocks, and then it will concentrate the money and flows into less and less assets like precious metals and commodities, because they do well under an increasing interest rate environment, like we saw in the 1940s, 50s, 60s, 70s, and beginning 80. So I think what's occurring is that the market conditions are underneath us are shifting and changing. And interest rates are a big driver of that. As people are less willing to buy bonds, less willing eventually to buy equities when interest rates hit a certain point, you're going to concentrate flows more so into less and less assets. And that concentration of flows are coming, but people haven't recognized that yet. So what we're looking at the positioning of all these different charts that we're looking at, we're seeing the smart money position now and start to accumulate mining companies, precious metals, and all this other commodities and stuff like that. But people, they don't necessarily look at the charts like a falling wedge and a breakout. What they look at are price movements for the most part. So everybody goes and they just chase price. I'm looking at bottoming characteristics, things that I've seen in charts over many, many years, like this big surge up and then the small selling pressure in a 3-hump consolidation here. And then I buy here, or I try to buy in this general tip. This is a ratio chart, so the equities themselves may or may not have entries, somewhere in this zone here, where they're ultimately bottoming at the bottom of their pattern that they're creating.
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as the pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020.
So yes, I think you're right. It's a rotation that's occurring that's probably going to last for many years, and people are so focused on the short term that the big picture eludes them. The big money here is waiting for the entire move here. That's where big money is located. It's not playing the small individual fluctuations on a week to week or month to month basis that are squiggling up and down here. So what I'm doing is I'm playing the big picture view. I'm playing this entire boom phase here in silver and letting that thing run. And I think we could see. I think some of these companies could go up. I mean, massively. What is massively over 10x, maybe even 100x, depending on what silver does, is possible. And it's going to be difficult to identify which company that is. There's a lot of fluff out there in the junior space. So yes, I think you're right. People aren't talking about the big picture view, the market conditions, and the changes underneath our feet that are occurring. So I think this is all smart money accumulating here.
Yeah, and you do see like massive underallocation to precious metals and commodities as a whole in recent times. And in my mind, it's like, have we just been, is this normal, or are we just living in very exceptional times? And is this reversal back into precious metals and commodities that's slowly happening? Is this really a boom, or just more of a normalization back to where things were before?
Yeah, so the market condition that we just exited and that we are entering, and this is a big process, bottoming process that we're going through, and it takes years to go through this bottoming process. The decline, the 40 plus year decline in interest rates on the 10-year yield declining, it forced and pushed all of the capital into the financial assets.
Yeah, and that was an
In
outlier. That's an outlier in history.
the financial assets I consider to be bonds and stocks. So the S&P 500, NASDAQ. And what we're seeing signs, in my opinion, of the top in those areas. So the NASDAQ, I can't tell you if it's topping the exact moment, but I think that crypto is an extension of that bubble. The speculative money, NFTs, all of those things are resultant of money getting slammed over into financial assets. And that's where retail is. Retail goes wherever prices go up the most, and it just sucks everyone in. And that's what I would consider to be crypto and these like uh, the smaller crypto, whatever they call them. I can't remember, the meme coins and all that garbage. So I think that's all a extension of where we're at in the cycle. Like it's all part of it. As this whole cycle shifts into a declining interest rate, low inflation environment into an increasing interest rate and higher inflationary environment, you're going to see bottoming patterns, big, huge bottoming patterns over, say, 2016 till today, where you're putting in double bottoms and inverted shoulder head shoulders in a variety of different ETFs and stuff like that. We can go in real quick, like here's copper, COPX. This is a big bottoming pattern here. This is called a double bottom, this whole thing there. The first bottom was in 2016. The second was in 2020. This is where a lot of things bottomed ultimately. And then we break out of the bottoming pattern. So this is a big bottoming pattern here. We break out of it there. We do a retest. And now we are heading higher. That's the cycle. This whole cycle is a resultant of 40-year decline in interest rates and money getting slammed over in financial assets, the 60-40 portfolio. And then this is a bottoming pattern that's saying that the whole regime is changing into an inflationary hard asset regime. Now, these patterns, it's not just in copper, it's in everything. So here's steel. It's the same type of pattern, and we've broken out of that pattern. We've done a retest, and we're going to break higher here and make another leg higher is my estimation. And it's probably going to be the big leg because in Elliott wave, you get wave 1, wave 2, and then this, I think, is entering wave 3, which is the big wave. And it's usually the longest, biggest wave in Elliott wave analysis. So I look at across all these different things, and we're seeing all of that. And what's driving it is the value of the dollar. That's one of the big underpinnings of it. And you can also see it in commodity currencies like the Canadian dollar versus USD. This was the last bull market in commodities. And right now, we've got another falling wedge that is about to break out,
And is that
where I
because the
think
Canadian
commodities are going to get unleashed.
is that because the Canadian dollar is correlated to commodities?
Yeah. So commodities, when you price them in dollars, so it's oil priced in dollars, and then it's gold priced in dollars. So when you do this, everything you do has a numerator and a denominator. In the denominator is the dollar. So what we're charting in all these charts, it's really not gold going up. It's gold going up in a currency, and the currency is generally the thing driving it. So it's the dollar. So what we're looking for is, when are other currencies going to outperform the dollar? Because then money flow, in my opinion, is going to flow towards the stronger currencies. So if we're going to have a commodity bull market here, we should see the dollar weaken against those currencies, in my opinion and estimation. So if we look at like Brazilian real priced in dollars, we should be seeing a falling wedge into a double bottom. In this pattern here, Brazilian real versus the dollar coming into a double bottom, that should mirror something like copper, which is a falling wedge into a double bottom. And this here, this is another fractal from a different company. That's wave 1 and wave 2, and then wave 3 is what we are entering. And me, so I've got these fractals up there, but this is a fractal is a repeating pattern that humans create, and it repeats over time, and it can occur on different time frames. So what I'm seeing is this decline into a bottom, into an up move, and that this is wave 1, wave 2, and then we're going to get a wave 3 and eventually a wave 5. So this is wave 4 pullback, wave 5 up. And this could be, $200 a share out in the future, and that could be a good estimation of when that could occur on. So July of 2030 or something like that. And this is, I'm not using just copper. I'm not using just one thing as evidence. I'm using everything: steel, copper. Here's uranium. So this is URA. Let me grab this fractal here. So here's URA. So I already have the fractal there. There's the fractal overlay on top of URA, and we could see something similar to this by 2030, and this is all being driven by money flows in the markets. And what I'm saying is that money is going to flow into these asset classes in a big way, and we're already in the process. So this here, if you were to put a name to it, this is a super cycle. And people were telling me, no, it's not, Andy, it's not a super cycle. We're not in a commodity super cycle. We're not a super. It's like, yeah, we are. And this is what I think could occur. Just because this fractal is overlaid doesn't mean we end up exactly there. It could be below it. It could be way above it, depending on how things play out during the bull market. So
Interesting. So we're looking at all of these different commodities, but we're missing the master commodity. What about oil? How's oil looking in your eyes? Because it from the last time I checked, oil was in a bit of a downtrend. But yeah, give us your thoughts on oil.
Yeah, I like doing the big picture view on oil here. Um, again, I don't think much has changed. I think we're doing a retest here of this downtrend line going across there. That's the same downtrend line here. I think we basically came real close to tapping it. And then I think we're gonna head quite a bit higher here to the upside. I think we're with the same fractal format. Um, this is roughly what's going to occur here, and I think it's going to occur pretty soon. Gold's our leader. Gold's running. Oil's going to follow. Just give it some time. Gold's kind of anticipating money printing. um, Silver will follow under certain market conditions, which I think we're in a kind of a slowing market condition, which is speeding back up. And then when the money comes through the system, I think oil is going to follow next. So that's what I think. Oil's going to go multi-hundred, and then we could break out and do a back test even at like 150. So we break out and we could even do a back test on top of that. But once we get above 150, I don't think we're ever going back below that. I think we're going to stay up there above 150, and then the oil companies they're going to make some serious money because once it gets up there and it just stays up there, oh man, they're going to make so much, and we'll see if they can produce more oil or not with higher prices.
Yeah, you and I were talking before we hit record. I was just telling you, I just deployed some capital into my brokerage account, and I did a bunch of ratio analysis the other night, and my conclusion was, and it's not financial advice, but my conclusion was the oil service companies were the cheapest out of all of the other mining stocks and commodity producers out there. I mean, is that what you surmise as well, or do you have a different take?
Yeah, so energy service companies are incredibly cheap. I think some iron ore companies are incredibly cheap. Those are probably some of the cheapest in the markets. Just because something's cheap doesn't mean it will outperform in the short term. But I think there's good entry points for those that are patient to buy stuff that's really low and bottoming. Obviously, if I were to say what's the hottest right now, I would say a lot of these mining companies look very good with good upside momentum already generated. So if depending on what kind of investing you do, if you're more short-term oriented, you need momentum that's being generated and moving if you want to play stuff that's immediate. If you're more of a long-term investor and you're trying to maximize your asymmetry, then you're going to do what you just did. You're going to go in and look at energy service companies, and maybe it's iron ore and nickel and stuff like that. That's way down, and you can buy at the bottom of patterns, falling wedges, double bottoms, whatever that is. That's what I tend to do. I like that. You create your portfolio around bottoms. Then when they start to move, that's when the portfolio lifts up. So you buy stuff like a year ago or 2 years ago, and that's what's lifting up my portfolio right now. And then my new money that comes in, I'm buying and accumulating. And then eventually in a year or two, that will be what's lifting up the portfolio. Yeah, in that time frame. So I don't do like an allocation like 20%, 30%, 40% to this and this. I buy whatever's on sale and has good patterns, bottoming patterns, and then I establish a portfolio over time, buying the most undervalued assets the markets uh, have to offer.
Gotcha. Well, before we sign off here, I'm looking at the 30-year, and right now we're closing at 5% on the yield. What's going on here? Are good times over, or what? What's your view on the debt markets?
Well, the 30 years, the longer end of the curve, the 10 and the 30s, are going up in a variety of different currencies. So you could look at like the Japanese bonds, gilts, just everything. They're all going.
Mhm.
So I think it's the market and the unwillingness of the market to be in these assets. So that's what I think is going on. I think people don't want bonds, and it deals with an increasing inflationary environment. And then they're looking at alternative investments like precious metals and stuff like that. So is it the end or beginning of the end? I think it's just part of the cycle. And people make up narratives based off of whatever they want. I think higher rates are coming, and they'll just continue to go higher over the longer period of time in a variety of different currencies and bond markets.
Understood.
So that's what I think is coming.
Yeah, I mean, you can clearly see the downtrend broken here on the what is it, the 30-year yield, and
Yeah, I'm trying to get it to update. It's still going super slow. Sometimes this happens when
so what's
the
the end
market
game?
does
What
that.
happens? I mean, why? What do we see on the other side now that like you look at the U.S. long end of the debt curve, you look at the 10 and 30 on the Japanese yen, you look at the 10 and 30, the British pound. I mean, all these yields are spiking up. What happens when all these currencies fail?
Well, I don't know if they'll fail. I think people aren't willing to buy the bond market.
Mm,
So when people aren't willing to buy the bond market, they go and they look and they want to buy something else. And precious metals is what's really going to drive it to the upside. It's people unwilling to buy bonds, and they're going to say, "I'm going to go buy precious metals." This is going to impact the equities market at some point, though. The equities markets are going to start to roll over and fall when these long ends get up, I'd say 4.5%, 5%, and we get above that. So you're going to see Basent probably come out and start doing yield curve control and stuff like that.
yeah. We'll keep an eye on it. Andy, thank you so much for coming on, my friend. Anything else you want to talk about before we sign off?
No, nothing really with the commodities group, but if you guys want to follow me, yeah, findinghighvalue.com, and then you can also follow me on Finding Value Finance on YouTube.
All right. We'll have the links to your YouTube channel and your website down below. So check it out, guys. And if you got value out of this podcast, drop us a like and comment. Go, Andy, go in the comment section. If you agreed or disagreed with anything we talked about, let me know. I do, in fact, read the comments, good or bad. So let me know your thoughts down below, and I will be replying to a small handful of them over the course of time. And check us out on Substack at capitalcosm.substack.com, and liking, subscribing, commenting, doing all that, on YouTube really does help boost us in the algorithm. So a little bit goes a long way. So thank you so much for your time. Thank you so much for your time here, guys. I will catch you later. Bye.